Hi, everyone. For this Summer Friday edition of Talking Markets, European economist Daniel Lacalle joined me from Spain to talk about the new world order he sees unfolding. And he was happy to blow holes in a lot of the popular narratives out there. End of American exceptionalism? Not a chance. The beginning of a bear market in the dollar? More like a dead cat bounce for the euro and yen. And he saved the best for last when we talked about Bitcoin, digital assets, and the disruption coming. I really enjoyed the global perspective, and I hope you do too. Hi, everyone. I'm Maggie Lake, and today I'm talking macro with Daniel Lacalle, a longtime investment manager, author, and founder of Alpha Strategy Consulting. Daniel, it's wonderful to have you on.
Thank you so much, Maggie. It's a great pleasure to be here.
So it's such a great time, I think, in these summer months to sort of take a chance to absorb what's happened so far this year, look ahead to the second half and see what that may hold and how to sort of position for that. And you have a new book out, which is a great point for us, I think, to jump off, called The New World Economic Order. So what do you mean by that? What does this new system look like? What do you think is changing or has changed?
It rhymes with the past, I think that what we have lived in the past 10 years, particularly 20 years, was a sort of mirage. The idea that all nations would sort of gather and arrive to the same strategies with the same long-term objectives and same policies. And that first to start with was a mirage, as I said, because it never happened. No, but what we're living right now is the evidence of going back to what the world has always been, which is two big economies that have different strategies, and the world is sort of moving around those two large leaders, the United States and China, and where those two have very different objectives, but at the same time, there's global commerce, there's cooperation, and the advance of technology is driving a completely different mindset globally that is diluting the power of governments in terms of their ability to constrain things to borders, because technology dissolves those borders.
Yeah, that's such an excellent point. And I think that's something that's not raised enough, because we kind of tend to think of it as this traditional through the lens of government and military power. And I think we're seeing that upended. I want to dig into that a little bit more. But this world that you paint, this sort of now spheres of influence, it sounds like you fall into that camp where we're kind of in this, I don't even know if it's multipolar. You're
No.
kind of talking about two spheres of influence. Is this an inherently more dangerous world that's full of conflict? Or if we understand the rules of the game, is this a world where you see these two superpowers coexisting?
Yeah, these two superpowers are coexisting, unlike with the US versus the Soviet Union. Both are following capitalist models with different ways of organizing society. One is based on the bottom-up perspective, the United States with big counterbalances and checks and balances, and independent checks and balances, while China is a one-party regime, but is also a very, let's say, corporate-driven economy. No, so. They coexist, obviously, and I think that the world is not more dangerous. I think it is actually less dangerous, because what I think was very dangerous was this idea of governments and global leaders getting together in big summits, deciding the fate of nations for 30, 40 years, and basically perpetuating their power and deciding on what people would have to do in the next 50, 30 years without being consulted or without any type of a democratic approach. So I think it is better I think it is better, and also I think it's better because the so-called multilateral world was not a multilateral world. We saw how the BRICS nations were getting together with completely different objectives than, for example, the nations of Latin America or Mercosur or the European Union, etc. So I think it's basically just realizing that the world was not a safer place in this big summit-driven multilateral type of approach, which was actually driving to a much worse type of economy. So I think that basically, without being a perfect world, it is a lot better.
It's interesting. It sounds like a version of the elites had too much power.
Absolutely.
This sort of, yeah.
Absolutely, that was it. We were in a world in which I used to go to Davos, and you would see how governments and economic elites all repeated the same things. There was no debate. Everything was very, very circumscribed to very few bullet points about what everybody sort of seemed to agree was the future. However, that future did not coincide with the interests of the middle class or with the agricultural sector or industry, etc. So it seemed like there was this alleged utopian vision coming from elites that forgot that the world is very complex, and forgot that at the same time it was not a positive environment for the middle class, which lost purchasing power dramatically. It was not a good environment for small and medium enterprises, and it was certainly not a good environment for the primary sector.
Yeah. Talk to me about what that elite looked like, because there's a lot of anger. We see a lot of voter anger everywhere, whether it's a democracy or, let's just say, sort of maybe the public at large. And in some cases, that's ushering in what people consider to be authoritarian or sort of right-wing politics. It looks different everywhere, but it seems to be stemming from exactly what you described, this sort of inequality gap that's increased. And it's, I think, easy to paint hapless government, well-meaning, but maybe hapless, spoiled government officials who've kind of been in power for too long for part of that. But what role did multinational corporations play in it? Because they were crawling all over Davos too. And in a lot of ways, the financial economy has been a big beneficiary of the asset holding economy. The rich in countries have participated in that. So to say it's elite that are driving it, for some people who are angry, means either liberals or government officials or deep state officials. But it sounds like you're describing something that's more global and broader than that.
Yeah, quite broader, which is basically is as simple as the history of perverse incentives. Is that global elites found that governments were using the same tools to address very complex situations, massive money printing, huge increase in government spending. Central banks and governments went from being the financiers of last resort to being the financiers of first resort. Everything was solved through enormous government spending. And interestingly enough, the easiest way to advance these gigantic policies was to use the tool of the extreme left. The response right now, we talk about the rise of the extreme right, but it's basically a pendulum effect of years of, because of maybe convenience, or even because of lack of wanting to enter into big debates. But we saw how left-wing or extreme left activists slowly took over energy policy, industrial policy, etc., in, for example, the European Union and other countries. And many of these leaders that were supposed to be the ones that would push against these interventionist agendas seem to go along with them. No? Obviously, a lot of governments presented themselves going along with these policies because either it was a consensus, or because it was, let's say, comfortable, or irresponsible. What ended up happening was that a lot of people globally felt left behind. People all over developed economies saw how illegal immigration was taking over their cities, was taking over their economies, etc. At the same time, they saw how their small business, their agricultural development facilities, etc. All of those things were being hurt by inflationism. No, so this is the problem when you elevate policies way too much. No, is that governments, even being well intentioned, governments forget the problems of people for an allegedly let's say long-term benefit. No, so people started to feel that the climate policies were going against the interest of small businesses, the interest of agriculture, the industry of farming, the interest of industries. No, all of that was being left behind, and really hurt. No, so where does the discontent come from? This is where I explain. Is on the one hand, governments slowly allow the agenda of left-wing activists to take over industry, immigration, energy, etc., and people feel left behind. So if center or centrist governments or parties decide to willingly ignore those concerns, as many did, particularly in the European Union, I would say that there was almost a sort of concerted effort of centrist parties to ignore those concerns, then it is obvious that somebody is going to pick up that discontent and make it their own. And that's the reason why what I say in the book is that centrist parties need to listen to their voters, not ignore their problems, not say, no, we won't discuss immigration because that is something that is not, you cannot even talk about it. No. And obviously somebody, a citizen in France is not going to be very happy if you don't discuss immigration when they are seeing a lot of challenges coming from the lack of effective policies to deal logically with immigration. No, all these things generate that tension, which is exacerbated by the fact that we have technology right now to give voice to people. No? Technology right now, somebody that writes an ex post has, I wouldn't say the same power, but is at the same level as you and I would be. No, in the previous sort of world. No, each individual is the media. So all of that generates more tension, but it is also positive. Because if we think about it with more of a long-term perspective, what I see now is that leaders in the European Union, in the UK as well, they're addressing the concerns of citizens instead of ignoring them, or even worse, vetoing or banning them, which was a very big problem when, let's say, there was this almost objective to reject the existence of discontent relative to these long-term and too top-down created policies.
Yeah. No, I think that is a very interesting take, and I like putting it in a global perspective because it takes what can be sort of local partisan issues or bias out of it, kind of broadens it out. When it's not just in your neck of the woods, you start to understand it's a much bigger issue. Then I think it's a little easier to focus on some of the root causes, even though we can take issue with them and, have a debate about some of what you just said. I think it's very important. And we know that that discontent is out there. It's real, right? Whether people are manipulating it and using it for just as bad results is something else. But so talk to me a little bit about what you see happening in the US, because it seems like, Donald Trump is the sort of exemplifies what you just described in terms of grabbing onto that discontent and riding into office and then throwing tape bombs all over the place for the last 6 months, which, has us all talking about, are we in a different world order?
Hmm.
Because of some of the actions. So we just passed a spending bill, a budget bill here. Shouldn't call it a spending bill because it's more than that. Hugely comprehensive. Nobody thought they'd get it done. They did. And at the same time, we have tariff news crossing every day still. What do you make of the course, the economic course the U.S. is on?
Well, I think that the first thing is that there has been a completely misguided perception about the U.S. economy as a whole relative to some pieces of political news, both with the Biden administration and also with the Trump administration. Is this idea that the president of the United States is going to change the entirety of the U.S. economy? The U.S. economy is incredible. And the U.S. economy is doing well. It's doing really well. I saw an article this week from The Economist saying that it's surprising how the United States economy is. Well, it's not surprising if you think less of top-down perspectives and you think more of bottom-up. How innovation, how the role of entrepreneurs and a very dynamic. I always say to my students, go to the United States and what do you see? You see U-Hauls. You see all over the roads. You see people that are going from one place to another. You see that social mobility. All those things are very, very important. So I'm very optimistic about the U.S. economy. I think that the U.S. economy is doing well. It's going to continue to do well, and that the tariff narrative is an important one to put into perspective. Now, because a lot of people have started talking about tariffs in April 2025, yet tariffs are the norm in global commerce. I always say also to my students, guess what? All of the Baltic countries in the European Union, in order to join the European Union, had to implement tariffs that they didn't have. So we need to understand that tariffs are the norm in global commerce, but also that non-tariff barriers are also much worse all over the world. So we were not living in 2024 in a free trade world. We were living in a very directed trade environment in which governments would pick winners and losers according to particular interest at a given point. And that let's say global approach that I mentioned before, some people call it globalism. I don't like the word, but that global multilateral world was always driven in the following way. Number one, put barriers against U.S. companies for fear that U.S. companies would take over their own industries, be so protectionist with their own industries, and at the same time open barriers to China and other economies. So what we have seen is not a world of free trade, but a world of allow China to enter our economies and put limits to the United States. The Obama administration, the Biden administration, the Bush administration, all of them, the only tool that they had was to use tariffs as a negotiation tool. You obviously find that there is a lack of, let's say, fairness in terms of trade with the U.S. companies. You put tariffs and then you negotiate. Obama placed them on solar panels, on steel, on so many other things, the Bush administration, etc. The way that the Trump administration looks at tariffs is from a global perspective. It doesn't look at it only from the trade perspective, but also from the perspective of how, for example, BRICS nations were using the enormous inflow of US dollars from their exports to undermine the financial and the monetary system built around the dollar. How those trade barriers were not just a question of fairness in terms of trade between exporters, but also a geopolitical tool used by China to strengthen its power relative to the United States and, let's say, undermine the position of the US dollar. So all those things get together in a very open negotiation process, which is what we're seeing right now. The people that say that the Trump administration trade policy is very uncertain and is very erratic. If you think about it, it's basically the way that any business works with its suppliers. Any business is basically a process of negotiation. And that process of negotiation is yielding a number of trade deals that are working in favor of leveling the playing field for the United States, and at the same time to readdress the issue of these global new alliances that China was trying to build. The process obviously creates a lot of headlines, but once, and I think that markets have finally realized that once you see that it's a negotiation process, it stops being something that is generating huge volatility to something that generates opportunity. And I think that's where we're going.
You don't think the market is calm because they have embraced this taco meme that Trump will just change his mind if the going gets tough, which is what we saw, and sort of lock Peter Navarro in a closet someplace and cooler heads prevail. You don't think that's what they're betting on?
I think that it's not that they're betting on that. I think that it's basically realizing that what they call taco, Trump always chickens out, is a negotiation process. I sometimes wonder how people negotiate, because every time that I've negotiated, I don't know, a new job or something like that, you ask for 10, they give you 5, you won. No?
Yeah.
That's not chickening out. That's negotiating. No, we reach a point that
geniuses on X. I think that we can credit for coming up with the taco meme, because if they love nothing else, it's to come up with a meme. But
no, I think it's fine, and I think that it's if you think that first, let's put things in perspective. Let's imagine that you think that Trump always chickens out. Don't worry, no. If you think that Trump always chickens out, why are those people at the same time writing reports every day saying that GDP is going to collapse, that recession is going to... No. Now, if you don't think that he always chickens, because it seems that the people that say that he always chickens out at the same time are reacting as if he never chickens out. You see what I mean? No. So if you think I don't have a crystal ball, but if you think that is the case, then you should not non-stop invest and bet on the United States. Okay. Now, if you think he does not chicken out and it's a negotiation process, then what you should also take into account is that is also a positive. The great thing about this debate, if you think about it instead of a partisan view, you think about it from an economic view, is that if you think that he is going to chicken out on everything, don't worry. And if you think he is not, don't worry, because it will be a level of the playing field negotiation. The interesting thing is, from an I Ching perspective, it is a positive both ways, for understanding that the economy is not the worst two words in economy are ceteris paribus, everything else remaining equal. What is the problem in the economic analysis that we receive every day from brokers, from economists, etc., is that ceteris paribus, all else remaining equal, is the norm. And that obviously means nothing. That's why they were so wrong with tariffs. That's why they were so wrong with the outcome of COVID. Remember when in 2022 there were 2 quarters of negative GDP, everybody was saying that the United States was going to enter into a dreadful recession. I think that, you see, it's basically giving too much importance to one cell in the Excel spreadsheet and ignoring how rapidly the United States economy adapts to a rapidly changing world. That is what's great. No? So let's forget who's in the Oval Office, and And let's think of those two outcomes, and those two outcomes are positive.
So I had a portfolio manager say to me, he also doesn't buy the taco meme,
Yeah.
but is worried that if Vietnam is being held up as an example where there is a deal in place and tariffs are higher, because at the end of the day, it looks like any deal is going to result in higher tariffs than were before, which is a win for the Trump administration. But he's concerned that U.S. businesses bear the cost of that. So it's basically a tax on corporations that offsets some of the benefits that may be in the bill.
Yeah.
And that worries him.
Yeah. I just never understood why people don't understand the most important concept in the economic world that we live in, which is overcapacity. People just don't seem to understand that we don't live in a world in which phones or goods and services are scarce, and therefore, if you put a tariff, that is going to immediately go to the final price. I always remind people to read Karl Menger's imputation theory. Karl Menger's imputation theory reminds us that costs don't dictate final prices. Final prices dictate costs. So if you have one cost that goes up, be it because of tariffs or because of labor costs, that doesn't mean that prices are going to go up, let alone aggregate prices. Think about this. What is the highest sort of tariff on goods and services? Labor costs? No. In the European Union, we have seen labor taxes go up 55% in a period of 6 years. Why did nobody say that was going to generate an enormous level of inflation? Because they understand Karl Menger's imputation theory when it is a statist policy that is sort of whitewashed in the economic academia, like high taxes. But when it's tariffs, more importantly, when it is tariffs coming from a Republican administration, because nobody said anything about Obama's tariffs, then they make this completely ridiculous analysis. Tariffs don't create inflation because they don't mean more units of currency in the system. And the same reason why higher oil prices don't generate higher inflation, as we saw in 2022. So I think it's all that is very, very important, is that we confused individual prices with aggregate prices, and we in the sort of intellectual economic world, the intellectual economic world thinks that costs drive prices. But if that were the case, being an entrepreneur would be the easiest thing in the world. No? So the first thing we need to understand is that there are a lot of reasons why we should be discussing and criticizing tariffs. No? Many, including diplomatic challenges, including a lot of things, but never use the inflationist argument, because when it doesn't happen, and it doesn't happen, they're going to come back to those people and say, see, you were wrong. No? It is important to understand that the reason why Vietnam or why China accept 35-50% tariffs is because their businesses have said, yeah, we're pretty much okay with 50% tariffs as long as we can continue to sell to the United States, because the working capital cost of not selling to the United States is higher. That the reason why, and that's why Trump works that way, because he's an entrepreneur. He knows what's happening on the other side. We know by now that China cannot decide to sell elsewhere the products that it sells to the United States. We have seen how containers were piling up in their ports, etc. So overcapacity is not being taken into account. The other thing that is not being taken into account is that supply chains are not producer, transport, buyer. There are dozens of chains in the middle, dozens. And the impact, if there is any, of these tariffs is spread out throughout those. Tariffs would generate inflation in individual prices if those goods were produced 100% abroad and had inelastic demand. You know how many products are there in all of the landscape of products that have inelastic demand and are 100% produced abroad? Zero. None. So we need to discuss tariffs from a political, from a commercial, from a diplomatic perspective, with an open mind, and obviously with all and can be criticized, but don't fall into the inflation trap, because it's a mistake. And and because when it doesn't happen, as it's happening right now, when it doesn't happen, then those that actually say that tariffs are a great thing are going to come back and say, guess what? You were wrong. And they are a great thing. So let's focus on that. No, what we are likely to see is that those very, very complex chains are going to absorb the tariff in the areas that have the highest level of overcapacity. Imagine your Walmart. No, your Walmart, to be fairly honest, and your supplier is saying we need to increase prices by 25% because there's tariffs. What are you going to say? No, you're not. Of course you're not. I'm Walmart. I'm 80% of your sales. You're not going to increase prices. If you're Costco, if you're Whole Foods, etc., etc. So move that throughout the chain.
Everybody takes a little piece.
Everybody takes it, because there are dozens of chains. It's not buyer and seller.
Yeah. So it sounds like you're pretty bullish on the U.S. You don't buy the idea that we're going into recession, and you think this budget bill is going to be able to stimulate growth here.
I think that the budget bill has a lot of great things. Deregulation, tax cuts, and the first time, at least that I remember, in which mandatory spending is being reduced. No? I think that it's obviously not a magic wand, and it's not going to make things go from 2% growth to 4% growth in a month. But I think it's a good thing. I think it is positive. And I particularly prefer supply side measures than demand side measures, because as we remember from the Build Back Better and from the Inflation Reduction Act, those demand driven measures end up creating a lot of inefficiencies in the public sector and in terms of expenditure. But that is the way that I see it. I think that supply measures tend to take longer to appear on GDP, but they definitely are more sustainable from my perspective.
You tweeted out earlier, if I'm not mistaken, that U.S. rates should be allowed to float freely. It sounds like you're pretty critical of the Fed. If they did float freely, do you think they'd be lower or higher than they are now?
Lower, significantly lower. Just read it. I think I'm incredibly puzzled with the Federal Reserve. I just don't understand how a Federal Reserve that says that they're data dependent has decided not to be data dependent. I just don't understand this, because if you read their beige book, which they publish for us to understand where policy is going to go, in their beige book, all of the Federal Reserve banks were mentioning a slowdown in economic growth and a slowdown in job creation that comes mostly, obviously, because credit and access to credit, the price of credit and the access to credit is lower, obviously, with very high rates. So if the beige book is talking about a slowdown in economic growth and a slowdown in job creation, how on earth do they maintain rates in an environment in which they themselves, there's a paper out there, and Powell said it in Congress, they say that they are above the neutral rate. No? So if rates were floating freely, banks today would not be lending at the current rates. They would be lending at lower rates, because obviously right now the activity of commercial banks is significantly hindered by the fact that the base rates are higher. It's a supply and demand scenario. Are higher than what people are willing to take. No, so I think that is an important lesson, is that the Federal Reserve they can make mistakes, but we cannot just be sort of diplomatic about the fact that they always make mistakes, because they made dreadful mistakes in 2021, easing in the middle of an inflationary burst. They made a dreadful mistake in September 24, bringing down rates when there was no inflation, job, or growth reason to cut rates. And now they're holding rates when their own beige book is saying that there is widespread slowdown in jobs and growth in all of their districts.
So do you, it sounds like you reject the idea, if you think US rates would be lower if they were allowed to freely float, it sounds like you reject this idea that there is this generational switch that's about to happen out of US assets to the rest of the world. That the US does not look like the destination it used to be, that people will repatriate home because the fiscal tailwinds are there, emerging markets have better balance sheets than the US, and that we're kind of at the end of US exceptionalism. It sounds like you do not buy that at all.
I don't buy it at all. We are living a dead cat bounce of the euro and the yen after the euro reached almost parity, and the yen went to 40-year lows. That's what's happened. Basically, nothing else. Nothing has happened in terms of capital flows in the real economy. And think about this: the idea that anybody can tell me. Somebody please explain to me how our business is going to decide to go to pay 50% taxes. Because the United States president is not as popular, or is more, let's say, contentious, or more. Nah, come on, that doesn't happen.
What about, we've seen Germany and Spain, those markets outperform the US in the first 6 months.
Yeah, but that makes sense to me. Obviously, you have the ECB being ultra dovish, interest rates coming hugely below the this is the problem with central banks. This is why they should float freely. So the European rates are below what would be the norm. Okay, that generates an enormous flow of capital back to the euro area quoted equities. I understand that. I understand it's follow the money, the same way that when there's quantitative easing, people flow to the United States. That you have more than quantitative easing in the euro area, where the ECB conducts the anti-fragmentation tool, which is printing money. They're financing the next generation EU fund, which is printing money, and at the same time they're lowering rates. So I perfectly understand that short term, and also because investors were hugely, let's say, overweight the United States and underweight euro. So you go from underweight to equal weight. There's a big move, but that's in quoted equities. That is perfectly understandable. But are you seeing that in gross capital formation in Germany or Spain? No. Are you seeing that in lending? No. So we need to be. I always say this: we need to be very differentiate the capital markets from the equity market from the real economy. The United States stock market, all-time highs. It is at all-time highs. That we understand, no? But obviously, there was a valuation gap. A lot of people have started to look at Europe and see, hey, let's look at some of these companies, because they're not doing badly. They're doing a good job. But that doesn't mean. And I always see this when I see I always publish the long-term trend of the euro dollar, no? From 1.6 to 1.2, as it is right now. We have seen it do like this. And every time that there's a bounce, everybody, you may remember in 2021, when people said, this is the end of US exceptionalism. It's the
rebirth of Europe.
The rebirth of Europe. Europe is spending. Europe is increasing government spending. Is taking these furloughed jobs and these enormous stimulus packages. That is going to work. I think that we need to be I think all of it goes down to stop thinking top to bottom and think bottom to top. And if you think bottom to top, there is nothing in the US economy that is leading you to believe that the US economy is going to underperform the European.
Now, what about China? Because this is those sort of bipolar now spheres of influence that you set up. How is China situated versus the US? And are countries going to have to pick the winner that they want to align with?
I don't think that they should. I don't think that countries should pick the winner. I just think that the world that we live in is these two leaders are not exclusive, no, because they're both capitalist. So you, as a country, investing with and allowing China to invest with you is perfectly fine. It's not the same as investing with the Soviet Union, if that makes any sense, in the 80s, no? So you don't have to pick. That's the beauty of it. What you need to do is to be very aware of let's say, the differences in narrative. No, what are this? We are so. It is so similar to the 80s where we're living right now. I remember when I was a kid in the 80s that I always heard the following things: Ronald Reagan is a protectionist. Ronald Reagan is going to destroy the U.S. economy. Ronald Reagan is going to destroy the U.S. exceptionalism and is going to make the Soviet Union be the global leader. Gorbachev is the leader of the future. Blah, 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 blah. Why was that? Because we paid way too much attention to the narrative and to media and too little to a top-down view of the economy. Now let's look at the top-down view of China. The top-down view of China is that China is a very poor country. It's one of the largest economies in the world, but in terms of GDP per capita is one of the poorest. Is a very, very poor nation among the global leaders. Number two is that China's growth has been driven by the largest real estate bubble in history. Yeah? And they are addressing that real estate bubble, and they're doing a good job at it, but that doesn't solve in 1 year or a couple of years. Furthermore, the way that it is being solved is by erasing the lifetime savings of millions of citizens that were invested in commercial paper of real estate companies, that were invested that in order in products that basically are wiped out. Okay, so the real estate problem, the overcapacity problem, and the consumption problem are not going to be solved short term. Now, the strengths of China, we don't have to debate them because we hear them every day twice. No, the strength in technology, incredible entrepreneurship, great population, very hardworking people, and very, very good human capital. So China is going
and critical minerals.
Yeah, and they're going to be, so they're going to do well, but we need to understand that they cannot do phenomenally with those challenges that I mentioned prior. We all talk about the challenges of the United States. Now we know the US debt, but we talk about the US debt, and the Chinese debt is higher. You see what I mean? Is that we don't talk about those things in context. We look at them separately. And I always say, China is going to continue to be a global leader, and its strength in technology, critical minerals that you mentioned right now, very important. All those things are going to continue to give them an advantage. China has technological advantage, human capital advantage, a financial system that is doing well in terms of those challenges that I was mentioning, but it doesn't have energy leadership. Its energy leadership is subcontracted to Russia and Iran and the satellite states. No, while the United States has technology leadership, capital leadership, human capital leadership, and energy leadership. Okay, that is important to sort of put everything together. Those two are going to continue to do phenomenally. What I think is that the European Union and other economies, instead of looking at China and looking with kind eyes government intervention, social control, and central planning. And when they look at the United States, they look with kind eyes. Way too much government spending, huge deficits, and massive monetary policy easing. Don't look at those things, which are the ones that are actually negative about those two. Think about the positives. Think about the entrepreneurship. Think about the innovation. Think about technology. Think about the level of creative destruction that is driven by entrepreneurship and hardworking people. All of that are going to keep those two leaders in their leadership position.
Do you think that this idea that China is just planning at some point for military conflict and Taiwan always comes up? There are real China hawks out there, and they're in government who deeply distrust China. This sounds like you see a world where these two superpowers figure out a way to coexist. Do you think that whole China on a warpath is a red herring?
I think
is a false narrative that is, perpetuated by the military industrial complex?
Obviously, I don't know what really. The fact that China considers Taiwan their own is not even debatable. They talk about mainland and offshore China. It's not even a debate. So the fact that they are and the way that they act relative to Taiwan is very clear. What I think is that the reason why some people in the United States see China's position relative to Taiwan as a national security threat is because right now Taiwan is the largest chip manufacturer in the world. But that changes in a couple of years. That chip manufacturing can go elsewhere very, very rapidly. Not necessarily to the United States, can go to India, can go elsewhere. No, so the same way that a lot of people saw the Hong Kong situation as a global threat that didn't manifest, that's the way that I see it. The way that I see it is that the Hong Kong situation was inevitable. It was inevitable that China would overtake Hong Kong, and that there was no destruction of the financial system. A lot of people were saying even that we were going to see a financial crisis of the 2008 magnitude because of Hong Kong. I don't think that is the case. I think that the Taiwan situation will end with China taking full
peaceful transfer, but the changes have happened already. So it's so interesting.
Yeah.
So interesting to use that parallel. So do you buy the de-dollarization narrative that China will in this sphere of influences, there'll be a dollar sphere and there'll be some kind of, yuan, renminbi, brick sphere?
Yeah, I don't see the brick sphere, no, but I don't see it because I look at it from a Chinese perspective. No, if I was China, do I really want to join Brazil, Russia, India, and South Africa, serial devaluators in a currency? No. Why? Because it would be basically transferring the inflationary pressures of Brazil, Russia, India, and South Africa to the Chinese citizens, and the Chinese government cannot live with inflation. Because that would be atrocious for a country that has a very, very small line of growth with very, very low salaries and very high levels of overcapacity. So I don't buy the BRICS currency. I do think that Chinese leaders, which are not stupid, are looking at Russia, India, South Africa, and any of those countries and thinking we can yuanize those people, not make a currency with them. We can attract them to use the yuan more. The yuan is a very abnormal currency. The yuan is a currency in a country that controls almost 17% of the global GDP, but is only used on 4% of global transactions, which means that not even the Chinese use it. This is important. Okay, so you trying to, let's say, yuanize those countries with these enormous loans that they get
Silk Road, and they've tried to do, right?
The Belt and Road
Yep.
Initiative. You get a little bit more of access to raw materials and to commodities and lend them in yuan, infrastructure projects, all that. I think that is what they want to do. I don't think that they can dethrone the dollar. Let me even be more conspiracy. I don't think that the Chinese government wants to dethrone the dollar, because that would mean eliminating capital controls, eliminating currency controls, and eliminating the control of the financial system. To be the world reserve currency is a big responsibility. You need to have full transparency, and when you have a real estate bubble the size of China, imagine what it would have been in the United States. No, it would be day by day news everywhere of bankruptcies and etc. So China does not want to relinquish the capital control,
control,
currency control, and financial sector control. I think it's a different perspective. It's more of a corporatist perspective, in which they use the financial system to maintain, let's say, hidden the imbalances of the Chinese economy.
And prevent social unrest. At the end of the day, that's the most important goal for them.
Absolutely.
Is to keep their population happy.
Imagine,
this is so interesting.
Imagine for a second, how would you keep population under control, or at least relatively happy, if you suddenly decided to use in China a currency issued with India, with Russia, and Brazil?
Massive change. This would be massive change for people. Yeah. Which is a really interesting way to think about it. It's so interesting, Daniel, to have this global perspective, which is why I'm so excited to talk to you, because I think people get very locked in their local view and the echo chamber they live on social media, to think about these things. So it's a really sort of interesting lens flip, I think, for a lot of people. What are you, and by the way, a little bit more of an optimistic view, I think, of the world, because we have a lot of people who think it's splintering apart and full of conflict and full of danger. And so what do you see, though? Are there risks in these macro changes? We've talked a lot about maybe the positives and a different way to think about this. What are the biggest risks you see from this new economic order?
I think that the biggest risk is that global developed economies' debt is disappearing as a reserve asset. That is the biggest risk, because no government in those developed economies is paying attention to it. It's paying attention to the euro area, is not paying attention to the fact that the euro is not the second, but the third reserve asset in central banks in the world, that gold has overtaken the second position. So that is the biggest threat. Because if I issue debt, which is money, if I am a country and I'm issuing debt, and I start to see that the traditional buyers of that debt, which are central banks that keep it as a reserve asset, decide, I don't want this, I want gold, I should pay attention and have a significant change in fiscal policy driven to reduce the issuance of new money, which is new debt. But they're not doing that. And that is the danger, because the very short period of time in monetary history, 1998 to 2022, which is nothing, in which governments grew accustomed to the view that developed economies' debt would always be accepted as a world reserve asset. That is gone, but it's not gone in 2025. It's that it ended in 2022. And they need to pay attention. That is the biggest threat I see.
And can gold fill that role? Or are we going to see gold in some sort of digital asset, or a tokenized something, or Bitcoin, or is there an alternative?
Yeah, the alternative is decentralization. Not just gold, but any other asset that is decentralized. Right now, Bitcoin is starting to be a global reserve asset. People see that it's not as volatile as it used to be. People see that it's a teenager currency, I call it. No, it's starting to be a reserve asset, a means of payment, and a unit of measure.
And it's borderless.
Yeah, it's borderless. It's decentralized. So for example, think about this. If the European Central Bank starts to issue the digital euro, the digital euro will be fungible and programmable, which means it can disappear out of thin air. Obviously, in order to issue it, they say no, don't worry about it. But it's there. It's in the design of the currency. So think about it. If you are the governor or the president of the Central Bank of India, of Oman, or any other country, do I want to have in my asset base bonds, which is currency, of these countries that have created a currency that is fungible and programmable? No. So I think that what we are likely to see is a decentralization of money. That does not mean that fiat currencies are going to disappear, but it means that governments in developed economies are going to be significantly more fiscally constrained than they thought they were.
So this digital innovation doesn't kill fiat currencies. No. It kills the government bond markets, the sovereign bond markets.
Basically, fiat currencies are not better or worse than independent currencies. The only thing that makes them worse, if you think, is that the government that issues it suddenly believes, for some strange reason, that they can issue all the currency, i.e. all the debt that they want, no matter what. No? But if developed economies start to be fiscally responsible, they start to cut down spending, they start to cut down debt, they start to cut down deficit, then those fiat currencies are likely to continue to be perfectly valid globally. The only thing that is threatening the existence of fiat currencies is the fiscal irresponsibility of governments.
So it's so crazy because if you think about it, if you listen to people who will win, the economic race of the next decade, you would think about things like technological advancement, AI, all of these other things. But you're also saying on that list should be who can fiscally get their house in shape in the best way. But it's facing a terrible decision because you either piss off investors or you piss off the people who in your country who are already mad, who can't afford a recession. Tough choice.
Unless, what do you do? We're starting to see signs. Now look at Argentina. Massive fiscal change gone in a month from huge deficit to surplus, and the economy started to grow, poverty started to go down, etc. It's when we start to see that economic growth is not driven by government spending, is driven by prudent investment and savings. So governments can actually continue to provide essential services and in fact make them sustainable and financeable, and cut in the undoubtedly enormous amount of unnecessary spending that they have built. Obviously, no government is going to say that a single penny of what they spend is unnecessary, of course. But citizens find suddenly, as they found out in Argentina, that government starts to spend less and they're richer. That government starts to spend less and there's less poverty. That government because ultimately the trick that governments play is, I'm going to promise you free stuff in a currency that I issue, and you lose the purchasing power of the currency. You suffer the inflation, and you suffer the loss of your real wage and deposit savings.
Amazing. I love this concept at the end because it's really fresh and something we haven't heard before and kind of puts a very different perspective on things. So we're going to have to follow up on that, but it's been an absolutely fascinating conversation, Daniel. Thank you so much for your time.
Thank you, Maggie. It's been an absolutely fantastic. I enjoyed it thoroughly. A great.
And your book is out in the rest of the world, but out in the U.S. in October. Is that right?
Hopefully, yes. That's what we're looking for.
Fantastic. Well, when you come over stateside, we'll have to get together in person because I think there's going to be a lot of people who are interested in this conversation and the book. So thank you so much.
Thank you very much. I enjoyed it.